In another perspective, we've taken, a movement back to the same point there again. Have we done it here? And will we do it there? You know, that's another major question. I mean, like, totally we could. So if it's a possibility, it should be a consideration. There's also been some weird B points that are left in here. The first of the three lows kind of becomes its own abstract B point, but this one down here is just straight up untested. So there's that. Of course, there's some smaller ones like this one here and this one here, which invites a movement back to the red zone to test them. The question also becomes, with this movement here, we first, had an attempt at the 61 here, didn't quite make it all the way there. And then for this movement here, we made it to the 61. And then for this movement here, what's the question? And what are we going to do with that? If we make a 61, right? A 61% retracement of this entire move makes a lot of sense. You want to know why? Because it's the first of the three lows, and it's also the old 61 from the entire movement up. So getting back to test that 61 from the underside and hitting the 61 in the process, but it also being the old 61 and the first of the three lows, very likely that we end up getting to it. So the first initial B points are getting hit here, but the real question is, do we have a ticket to get on top of the red zone again? Like, by the time that B point, the blue one, the first of the three lows is hitting, we could be smashing the red zone many times over. In like about 3 minutes, it will become the case that we have to break the trend in order to get to the blue line. And what it could mean is breaking the trend could lead to getting to the blue line instead. The first two B points have hit though, but it leaves this last one in question. And this is the trend that's likely going to have to break in order to get to it. And in the process, it's made a few B points on the short term as well. So 61 that's kind of slumped through is in play as well. This is the blue line though. Any orders placed on the first of the three lows are now filled. And the irony as well is not only are we coming back up to the old 61 from the very beginning of the day, but we're coming up to the short-term 61, where I think that getting through it to get to this next 61 could be on the table as well. So using this little area in between is not too out of ordinary. We've got this kind of set up. The initial response to the 61 was enough to bring us down to the red zone, though. We did talk about that. Even the small fluctuations are clear before we make the effort at the playing out the first of the three lows, because it made 1, 2, and 3 consecutive lows. We came back to the first of the three and all of the short-term B points along the way, excluding the one that's a little bit higher. That's still untested. But in order to get to that one, what we would have to do is make a 61 of all of this. And then once we make that, sure, I'll be looking into this one, naturally. And making it back to that one is like making it back to this first B point all the way back here, where in reality, we came up very close to the 261 of this movement, where that's the same kind of move that we made on the NVDA earnings yesterday. The Nasdaq managed to come down to roughly the same level. And if it acts anything like it did on the earnings, it won't only be this B point, but actually this one all the way up here. And if it gets to that one all the way up there, what are the odds we're doing it just to hold it and not break it? What are the odds we don't see it through and end up in the range above again? Remember that this is all-time high up here. Of course, all stops can be placed at a profit from any positions taken from today. This is the final trend at the moment, though. We don't have any other major lines to get through, and time will take us through this one, it looks like. Of course, here's the B point. Any orders placed on it are likely to be filled. But don't discredit its ability to get back to the highs and through them, because if you have a position that can be exposed through the high, it could be worth 6K, like I said, in points. That high of day can turn into a B point, and we could double it, triple it, quadruple it. 26,000 is off that fib scale. So now the 61 of the entire movement. Let's take a look at that. As we approach it, we can see so clearly that everything that everyone did during that report was easily overlapped and everything was brought back to basically the highest B point. And, whatever movement we thought was significant in the morning is now rendered relatively insignificant as we just cut back half of it like it was nothing. And it was off of a pattern where we made 1, 2, and 3 consecutive lows, came up, made a 61, and rallied. Like, that's the reality of it. It's as simple as just understanding that. Understanding that exposure to this high right here is the first step. Well, not even the first step. The first step was the exposure to these little highs in here, these smaller B points that we had going on in there. And basically, those were the first initial targets. And then when we got up to the major target, the blue dash line, what it was originally, it became okay, what about making it past the blue dash line to get to the 61? And it made it to the 61. And then I was like, well, when we get to that 61, I'm going to want it to come to this 61. And we almost made it there. And then, naturally, the next thing that we have to look at is the only other B point on there. And that's the same movement that we made on NVIDIA when they did their earnings. Let's take a look at it. So on NVIDIA, what did we do? We were going sideways, and the bulk of the people were contained within this movement. We made a giant move down. And where did it go? To the 261, and it came all the way back up in this effort to go sideways, up, down, and middle. And that kind of movement is what we're seeing on the Nasdaq, replicated very similarly to how we made the report yesterday. This reminds me of, what we're doing on the bigger picture. When we get up to this old all-time high, it's like getting up to this high right here and then just stomping it out and stomping it out. And this big movement right here is like making this little movement right here on the daily. Like nothing in comparison to the 6,000 points we could do on top of it and come right back. And what news event's going to drive us up 6,000 points over the course of a year? That's what I have to ask the public. Or 2 years? Or is there no event that's capable of that? Or are they going to go back and brand it with an event after the fact that it's happened? Like, oh, it happened because of this event then. No, it was always part of the plan. And the key is to see it early and to understand what the value of being exposed is. Is every day like that? Nope. Every day isn't like that, where you can see that you could be exposed to a 6,000 point target through the all time high, which is insane to a lot of people. How many people think that that's going to happen? Well, you have to have reason to believe that's going to happen. You have to have something to be able to show that that's going to happen, or that it could even remotely happen, or that there's a chance that it could happen. And that's what I'm saying, is there's a chance that it could happen. And knowing that there's a chance for something to happen like that, what is it to get a position in the short term and have some exposure left over just in case there's a chance that we do it? Because if we do it and you don't have it, that will be one of the biggest losses over the next few years, I think. Missing out on 6,000 points, even a smaller position. It's something that's so easy to do that you don't have to put much focus into, and it prevents you from having to trade a lot of really tough times in the future on that 6,000 point journey. Some days you might not want to take part in it, so you don't have to. The more exposure that you can build up to those bigger movements, the less inclined you'll feel to be to trade dangerous middle like areas. Same thing goes with people that have taken the low of day today. Do you feel so inclined to get involved with this because you're missing out on what? On what? That's not really a B point yet, but it will be in the future. And I'm like, well, that's fine. Ironically, I want to go over something really quickly as well. This did make it here and do it again. We managed to get through that point to the point that we've almost doubled it past that now. So that's kind of intriguing to see how that works. This is the 61, by the way, as well. What the slowness does is it basically gets a lot of people to short it so we can hit their stops and trigger them through the old all-time high in the form of a squeeze. And a lot of the people that are long that don't know why will have most likely just sold it because it's sideways and they get a chance to stare at their profit and loss and settle for it. It's human nature. Yeah, we're triggering in their stops through the high. This is the way. And it's not because of any other time or whatnot. This is the time that we do this movement, and it is for today and for this purpose of serving the goal, hitting to the B point. Every B point I put on the chart today is filled, Every single one of them. This one's hit now. I could see that there was a plan from the very beginning There was nothing maybe about it. And today, with that being out of the way, what could tomorrow bring? What if we get on top of that and stay on top of it for 6K points? Could be huge. You know, the fact that there is a chance that we can do something like that is nuts. And when we get up to the 261, it'll be about hedging it.